I'm sitting here with the Azares team with Sam and Tricia Azares, and this is just part of the team. They're going to let us know about more of their team members and who's on it and what's their specialties. Good morning.
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 I'm Tricia Azares.
I'm Sam Azares.
We are with VIP Mortgage. Sam and I are a husband and wife team. We work together. We've been actually working together for the last 15 years. We do have our assistant, Esmeralda, who is our Spanish speaker, so we are able to take care of the clients that are Spanish speaking as well. We also have an arm that does reverse mortgage, Tina Steele, and then we also have Rallis, who is
Our hard money lender. Yeah. So basically with his hard money lending is that he's able to offer clients that would technically really do not the basic loans, so more of the investors. So if there doesn't fit the conventional type financing, John's able to actually offer those clients the hard money loans that would be able to get those financing through.
And does John also work with VIP or
Yes.
is he outside?
No, he works with VIP Mortgage as well.
Okay. So what do you guys offer differently than any other loan officer besides great customer service and great rates?
We're available all the time. Sam and I have built our business off of client referrals, so customer service is absolutely the key to what's grown our business and kept us through some of the tough times in the years. We know that the busiest time is during the weekends and a lot of times at night, and a lot of lenders turn their phones off and we are not. The nice thing with Sam and I is that one of us is always going to be available, even though we have a family. There's two of us you can contact, as well as the other parts of our team as well. So that, in its sense, we have quite a bit of experience through the years. We've gone through some very tough times and seen a lot of changes through loan programs, and we've been able to adapt and really grow off of some of the changes and been able to succeed through the years. And now we're starting to see some things kind of come back to the way that normal lending is going again. It's opening up a lot of doors for home buyers again. It's not...
Like how? How's it opening up more doors?
When things started changing and the government came down and started becoming really strict on a lot of the lender, or all of us together, the loan program, the programs were a lot more difficult to get qualified for. We're starting to see some of the investors feeling more comfortable with some of the programs again. Therefore, they're opening up the doors for some of the programs that were taken away.
But are they loosening up the reins, so to speak? Or
In some sense, yes. I think now we're doing smart lending, which is something we should have done a long time ago. We still do not have the riskier programs, like the interest-only programs are very small. The balloon programs, a lot of those have gone away. The negative amortization programs, a lot of the high-risk programs have all gone away, the stated income. But they've opened up the doors to smart lending, stuff that will really just qualify the client to make sure that what they're paying today is something they'll be able to afford years down the road.
And there's also like first-time home buyer programs that are still there. You know, one of the things that we'll always do is we'll tackle any type of loan. Especially first-time home buyers, you know, my wife and I are very adverse with working with the community through the nonprofits here locally. You know, the bond program's still available. We're very, you know, informed about doing that type of programs. There's also the WISH program that's out there as well currently.
Now, what's the WISH program?
The WISH program is basically, it's a 3-to-1 match. So if a client comes in with a down payment, let's just say of $5,000, that nonprofit is then going to turn around and triple that down payment and actually entail to that client to put down more money. Therefore, you know, putting with that, obviously it's going to lower that monthly payment. But with that WISH program, there's always going to be income limits. So, you know, when we have clients, we're always going to look at the best interest for that client. So if they do qualify for certain programs, we're going to point that out to clients and let them know that, hey, you know what, this program with your income that you have, you are eligible for this type of program to be qualified for.
Now, with the WISH program, does the rates a little bit higher?
Not in the WISH program. They actually take to where the FHA program rates are today. The one program that is a down payment assistance that is a little bit higher interest rate is the Pima County Bond Program.
And tell us a little bit about that.
That one is a 4% down program. The income limitation's a little bit higher, so it's not as strict as the 80% median like the WISH income, or the WISH program has. The nice thing about the bond program is that it doesn't ever go away. The WISH program, once they run out of funds, that program is not available until it gets replenished. The bond program, every time a loan funds, those funds become available again for somebody else to use.
Oh, nice.
So the bond program is very nice because there isn't the risk that that program might run out while you're in a contract.
Right.
The nice, unique thing about Sam and I is that we're not afraid to tackle any type of loan program. We definitely will do anything from first-time home buyers, investors, all the way up to affluent clients.
And the other things that we'll also do is that not most lenders will usually even tackle are renovation loans. You know, we do those. That's a great loan to actually get into for a client that wants to buy a house, likes the house, but doesn't like the inside of it.
Right.
So they don't have the extra capital to actually do the renovations, but in an FHA 2 or 3K renovation, they can finance the renovations into that.
Now, how
that
difficult are those kind of loans? I kind of heard different stories about them.
They are difficult, I'm not going to lie. It does take longer than a normal processing of a regular FHA loan.
Mm-hmm.
But if we're able to work with the general contractors, the clients know exactly what they want, and the client is not overdoing the renovations, then it all works. You know, the way we actually were able to make it work is that back in the day, our background working at Bank of America, we did a lot of the one-time construction loans. You know, again, making sure that the paperwork is all set from the general contractor, the plans are already all done, and working with the clients and putting the clients and the general contractors and us as a lender on the same page, making sure that everybody knows exactly what the process is going to entail. A lot of the mistakes that happen is that, you know, if you don't get all the paperwork up front, there's always going to be delays down the end. So
It's a very tedious paperwork. It's a lot of different parties working together that all have to work together at the same time, because if one piece of that party doesn't follow up, it becomes such a nightmare to grab all that information, because it does need to move in certain stages throughout the process, and that's really what becomes difficult.
So is there a lot of paperwork on the buyer's side of the house, or is it really just on the lending and the
more than
contractor?
lending, yeah. I would say more than lending, because all the paperwork is going to be the same for the client to qualify. Income,
Right.
you know, assets, you know, credit-wise. The only additional paperwork is getting with that general contractors, or how many contractors they decide to use, making sure they signed additional paperwork, because those disclosures are putting an agreement between the subcontractor and also the actual client to make sure they agree to terms for the price and what type of renovations that they're actually doing for that loan.
Okay. And what other kind of loans do you guys provide?
Oh my goodness, we do pretty much everything that's out there. We do the 5% down. There's a new program out there that's 5% down, and you can have the parents gift you and keep it into a conventional loan. Fantastic program. FHA is generally your most popular first-time home buyer program, but now mortgage insurance has opened up some of their opportunities, and you can do a 5% conventional, where the mortgage insurance is about half of what you normally would pay, so the payments stay
nice.
lower. And as long as it's a parent, they can gift you all the 5% down, so that the client doesn't have to come in with anything. So that's a very, very big program that just came out. We'll do VA loans. We're very good at the VA loans. We like those. FHA, investment properties. We've done jumbo loans. We do them all.
Yeah, and what's actually starting to make a comeback are combo loans. We do have an investor, actually like credit union, that actually will do the second part of the loan. So back in the day, we used to do the 80-10-10s. Those are now available again. So if clients don't want to actually put down the full 20 to avoid mortgage insurance, we do now have an investor that will actually go to a 90% loan to value, combined loan to value, and actually do those combo loans back again. The other things that we're actually starting to see more of a trend are lender-paid mortgage insurance programs. You know, those are where the interest rate is higher, but if it only makes sense if the client is only going to be in this house for, I'd say, 5 years or less, you know, and that they're going to be out of it, instead of paying all that monthly mortgage insurance premium up front and on a monthly basis, in which their payment is a lot higher, you take a little bit higher rate, and then as far as that goes, lender mortgage insurance is actually financed into that interest rate.
And how much more of the interest is it when you have that type of loan versus just a regular straight loan?
It's usually about 0.5% higher.
Okay.
Yeah.
It's usually about half.
Now, you guys also do reverse mortgages, correct?
We don't physically do them, but we have a team member that does them.
And she's very familiar, correct?
Absolutely.
And so we'll get her in here if we can to kind of talk about that program too, because I hear that that's a huge thing with our senior
Right.
citizens. So we want to talk about that as well. Now, one thing that you guys did not touch on that I think is just phenomenal about you guys, and because I personally use you because you're part of my team, is that you guys close earlier on your loans, even though you say, yes, we can have it done in 45 days, especially with the PEMA bond or something like that, the USDA loan that you guys do as well. You actually can close quicker than some of the bigger teams.
Yes.
And the reason you can do that is because you are a smaller team and you're more personable to your clients to be able to make sure those files are closing on time and actually close before they were supposed to. I know we've got a transaction going right now that we're actually closing a week early, which is everybody's happy about. So that's kind of cool
Right.
that you guys have that ability to be able to push these files through,
Right.
not just push them through, but, be very efficient with your work and be able to move them through and get, the buyers closed and the sellers moved on to whatever it is they need to move to. So what else about you guys would draw someone to you to want to use your team versus a big team?
You said it, like, we're very personable. When we take on a client, we want this client to be our client for life. So part of the things that throughout our transactions, what we've done is we've gained a lot of lifetime clients that eventually turn out to be actually friends eventually, and that's how we've built our business through our showing them that we're very knowledgeable, getting them into the right program that sets the trust with that client, but also we're very personal. That's the thing is like, we're always going to attend the closings for the clients, where we want to make sure from we start them from the start, we want to see them through the end. So
Well, I
that's
think
one
the
of the
other
things
thing
that
is
we do.
the expectations that we set up front with the clients. I think that's a very big key on making your transaction as smooth as it possibly can. Because there's a lot of client expectation that also has to fit into our puzzle to make sure that it's as smooth as possible.
Right.
For example, we will do our very best to get every bit of documentation that we need from the borrower up front, so that when it goes into the processor's hands and when it goes into the underwriter's hands, there's very little that's needed as we finish up the loan process. So that's our biggest expectation when we sit down with the client up front and we do the disclosure signing initially. We actually, Esmeralda, our assistant, will do a timetable for us and we'll put where the close of escrow date is. And generally what we'll do is we'll backdate from that close of escrow date, and even though our close of escrow date might be X, we really backdate based on a week before that. And I think that's really the key, so the expectations are set with the clients right from the very beginning. This is what we need, and this is when we need it by, to be able to make that close of escrow date. And I think just having that expectation set up front, knowing that there's not going to be a lot of surprises along the way, making sure that they know that there's very big open communication lines. They'll always be updated weekly. We're very big on updating both agents weekly. That's, I think, what the key to success is that we have found is making the transactions as smooth as possible, is the clear expectations along the way.
And one of the things I know with my wife is just, working with her for now 15 years, is that she's very big on guidelines. In fact, as just a report that came out was that she was the second highest person to actually go back in and review market clarity that has all the guidelines for all the investors. So she was ranked the second one, so she goes in there and she basically makes sure that when we get a client, and if it's an different situation, she's going to go in there and make sure that there's no hiccups down the road. We address it up front, and that's why she's always very knowledgeable and makes that transaction smoother. So there's always going to be difficult times down the process of the loan processing, but if we can actually address it up front, knowing that this hurdle is going to present itself down the process, and we address it now, it makes it a smoother transaction. So.
And guidelines change consistently, so it's very, very important to keep yourself knowledgeable.
Absolutely. I know as a realtor, I try not to really dabble into y'all's world too much, just a little bit, just to be knowledgeable, and then let you guys handle the rest of it. I know for me personally, whenever I took you guys on part of my team, one of the things I had talked to you guys about was the pre-qualification. Even though I really want it, I really don't want you to give it to me unless they are actually pre-qualified, because that will only cause us headache towards the very end if they don't qualify at the end. And that's one good thing about you guys. So if there is another realtor looking to find a good lender, I think that's a great quality of you guys, that you just won't push out those pre-quals.
No, not at all.
Just because us realtors are wanting it, you actually do it because they're actually qualified, and that helps to have a very smooth transaction.
Right, absolutely.
I was talking to one of the clients we're working with, and she was very impressed how smooth this transaction has went. I mean, the last time we was doing it with a different lender. It was a very bumpy ride, and this transaction for them has been just a godsend. And I thank you two for making it that way for them, and then closing a week earlier. And it's just, I think it's just proven to them, when you use local lenders, it just makes a better fit, because everybody knows about the market, the houses and the prices of everything. We'd like to thank the Azares for giving us this time to be able to interview them, so they can tell us a little bit about their business and what's really important to them. And as you notice, what's really important to them is the customers. So if you're looking for a lender and you want to keep it local, please visit our website to get a hold of the Azares, or as you see on the video, you can directly contact them. Thank you so much for taking the time to watch the video. I hope this has helped you to understand the process of what a lender does, and also for the new buyers, what it is that we can do for you, that we have many options that you can choose from as the lending. So don't be so scared. Come on over and we'll be able to help you. Thank you for stopping by.